This is No Operating Manual, a podcast about building healthcare companies when there's no one clear path and no operations manual. Today, we're going to chat with Maura McGinn, founder and CEO of Impetus Talent. She works with healthcare founders and leaders on one of the hardest parts of building a company, getting the right people in the right roles at the right time. Before that, she was an early hire at Bright Health, where she helped scale the company from a small team to more than 1,500 employees. Today, we'll talk about what that experience taught her and what she sees now as founders try to grow. Maura McGinn, thank you for being here.
Thank you for having me.
So we'll get into it. You started your career in executive recruiting, and then you moved inside a startup to build it, and then eventually found your way back to recruiting. When you look back, what did you learn by sitting on both sides of that table?
It's a great question. I think the context maybe on each side was a bit different. I think it's important to remember I actually started my career in search. So that was really like my first real job. And I think having been in search only, I didn't really have the broader internal view of who else was there, what other skills people brought to the table. And so in kind of a pure play recruiting role, myself and a lot of my peers, I think often struggle to understand why somebody who seemed perfect on paper to us maybe seemingly was not getting hired, hitting the mark, or translating to a client. Whereas on the other side of the table, I think the context piece that was sort of shifted for me in working with people who were the hiring managers on the inside. Oftentimes, I think they thought these perfect people existed and there was like an infinite universe of humans who could do this job. And so they didn't have the context of the broader market and the market awareness of who really was available and, what skill sets really existed that complemented the business needs. So I think just kind of mutually understanding where the other side of the table was coming from in some of the recruiting conversations is one thing. The second thing that I actually was thinking about this morning, actually, when I was recruiting, my job felt like get a really interesting, exciting person motivated to take a job at this company. Like it was like, be the cheerleader, be the fangirl in the market. We actually used to joke about like whale hunting is what we called it. When I was at Bright, I remember I completely shifted my job, oftentimes in the interview context. Instead of being the person to hoorah and get them excited about coming, my role was actually convince them not to come. And that's largely because I think people were very excited about what we were doing and building and were sometimes blinded by the reality of what the job was. They just wanted to be a part of this well-funded startup. And so I spent more time saying, here's why you don't want to come here. You'll have no staff. No one will help you with your budget. You will do your own PowerPoints. So it was just sort of grounding them in the reality of what the business was versus what the kind of facade in the marketplace was.
And that was back when you were receiving, so many different resumes for every job. So you really were trying to find the right person. Like it was a needle in a haystack.
I think that's right. I know we were a little lucky, I would say, when I was at Bright. I remember I used to track the amount of applicants in our applicant tracking system. And there was a period of time where we had like tens of thousands of resumes coming in. I had to make the business case that I could no longer track in Excel. But the reality was we were turning down way more people than we were saying yes to. And so we did have to be hyper clear around what we were looking for. And that obviously changed. The first year looked very different from the third year in terms of skill sets. But yeah, I think that remains true that we had to turn people down and find the needle in the haystack.
So Bright launched in 2016 and you were there at the beginning. What do people misunderstand about those early days?
So many things, Erin. I think one thing that I mean, maybe on behalf of everyone who was there early, that's probably important to say now in hindsight, was it actually was fun at one period. I think people see a lot of the pain and the challenges, and I think some of the later layoffs. But there was something very exciting and new and novel in what we were doing, and it seems ironic since it was a health insurance plan, but we really did think we were changing the way healthcare was paid for and delivered. So I think there was a lot of momentum and excitement around just the business. Bright was a bit of a different animal early on. I think people are often really curious, how do I get into a startup? Early, a lot of the hiring is friends of friends and it's people you know in common. And that was something I had to come up to speed on when I came in because I was charged with the recruiting and the hiring. And there were people in process and people who had already been hired before I got there who were neighbors or former coworkers that maybe I would not have selected, but there were sort of relationship values to them joining early on. The other thing is it wasn't all brand new hires. I think a lot of times people who've not been in a startup are not always aware that it's full-time people, it's consultants. A lot of times you've got fractional. So there's a lot of different profiles of people who are early members of the team. And so for a long time, I think there were like 30 people who worked at Bright who were not employees. There were three. It was the founders, and then it was a lot of consultants. And we grew not through a direct acquisition at the beginning, but we absorbed what had been the Colorado health op, the co-op in Colorado. So we took in a bunch of people who were part of that health plan that had wound down and they joined our team. So we had a lot of cultural new people, absorption of people, friends of friends, former United. So there were some interesting dynamics, but it wasn't all everyone who was like gung ho full time employee here. It was kind of a hodgepodge.
So how did that work in absorbing? Like, how do you mesh those cultures, especially a co-op to a startup?
I don't know if everyone who was there would say we did a great job or I did a great job in supporting that. And we actually joked that not joked, we actually talked about the fact that it felt like for some people a bit of a loss because they had been working on another startup that ultimately took a different course and they ended up at Bright. Our personality challenge was broad in that we had business operations folks who were doing, HR, legal, compliance, finance, product. We had technical people because we were trying to redefine how technology plays into the health plan experience. So we had engineers and product designers and in Texas. And then we had the co-op people who were largely insurance oriented. They were focused on providers getting, paid, provider relations, claims, compliance was really important. I think what we did do well was we very early on had conversations around the mission, the vision, the values. So we defined that early and I think clearly. I think we were really intentional in a way that felt awkward at the time about getting a regular communication cadence in place. And I say awkward because truly, Kyle Rolfing, who was one of our co-founders, president, super entrepreneurial. This was his, I think, third or fourth startup. He said to me one day, Maura, this is going to feel awkward, but once a week, we're going to get together as a business and we're going to do an employee meeting. And we're going to repeat the same thing over and over and over again. And that created like rituals and culture. And he led every meeting with here's the mission, here's the vision, here are the values. And we did, a member story. So people understood, who ultimately was impacted by the work that we were doing to really ground us. So I think creating that and then over time that took off and took new agendas and had new people speaking and we highlighted employees. But I think getting everyone introduced and realigned around, why we existed and who we existed for and how we worked together was probably how we created that commonality.
You've talked before about how different an in-house startup role is from outside perception for yourself. Again, you started when you were really young as in executive recruiting, and now you're going in-house. I mean, you were still fairly young to lead the team. What were you most unprepared for when you made that transition?
I think startups are so interesting in that they are a very different type of meritocracy. And you do see people at various seniority levels leading different functional areas, supporting different functional areas. And so I think I was surprised by the fact that people actually trusted me to do my job. Like, I think I expected like a little more resistance in some areas. So the fact that they were like, you are responsible for this, and then they let me be responsible for it, was a little shocking, jarring, surprising. I'm not sure. I think ultimately for me, I had been at a role when I started in search where I intentionally made a lot of the people I recruited, whether or not they wanted to or not, be my mentor. So I would talk to them about here's my career, here's what I'm thinking. I'm contemplating going to business school. And so I would ask them what books they were reading. So I was pretty intentional about sucking as much knowledge and information as I could from the people around me. And so I actually approached Bright very much in the same way. Thought maybe that might actually undermine me in some instances where people might think she doesn't really know what she's doing. But I actually found the opposite. I found really collaborative partners. I think about Brian, who ultimately I worked for, who was our general counsel, and Dawn, who was our first CFO, as being really core and foundational for that partnership for me as we thought about staffing plan and the comp structure and the employee equity program. And so we worked really well together, and obviously through their teams as well. I had good relationships, and then other senior executives I found, if I pulled them aside when we were doing budgeting and said, "Hey, I really need this," I found that they were really supportive, which I think surprised me because I think you often think when there's limited resources, people will be pulling for them, but it was way more collaborative than I ever could have anticipated.
That's good. I mean, that's a good culture. So, speaking of culture, though, like what was the deliberate things you talked a little bit about mission, vision, values, and repeating that over and over again? What other things did you do to build that culture at Bright? And what have you carried on in other roles?
So I think the most important thing at Bright that we did to build culture, not that it was like one most important thing, but one thing that really sticks out to me was constantly trying to remind everybody that we were all just people. There was a slide that I hated so much in our fundraising decks and in some of our board meetings, which highlighted that we had 8 former CEOs on our executive team. Part of why I didn't like it is it creates this idea that there's this group versus, and I think we worked really hard internally actually against that, despite that being kind of an external document. I sent probably the email that was the most popular one of all time on the reply all thread, at least in my tenure, which was initiating an internal Minneapolis all company shuffleboard competition. And I remember Bob, our CEO, replied all like, "I'm in." And then he suggested someone on the finance team was going to be his partner. And so we just had very broad participation. People peered and partnered across seniority levels, across departments. We did a lot of charity work in the local offices and in Minneapolis, and we made a service day. And I think everyone coming together and serving communities and wearing aprons and handing out food and just being, people serving people was a very humanizing thing that we did that, you know, made it easier to engage with a senior leader. In the hallway. Also, potentially unpopular, we did not have assigned desks. We had no like desking policy. We didn't have offices early on. And so you just engaged with people. I sat next to one of the pharmacy managers and, we always checked in on his kids. I saw, daily updates. So just the fact that you were interacting with people that you had zero work overlap with, I think was also something that was frustrating to some people who liked having their monitors, who liked having their predictability, but created some community that otherwise maybe we wouldn't have had.
It sounds like it also created a bit of transparency into what others were doing or just in overall communication as well as people are replying all. I mean, that's like forbidden in most company cultures. Don't want to stack up that email inbox.
I'm sure at some point IT put the kibosh on it, but not
You get
before the
too big and you can't reply all. So now, after Bright, you worked at Belong Health and now you advise VCs and execs on building leadership teams. Having worked on both sides now, how do you look at how teams work together and how those VCs and execs should be looking at building their leadership teams?
It's a good question. I'm going to use the classic consultant. It depends. I think the biggest thing that I really push for is clarity and the what are you solving for. I have seen more often than not over rotation on bloating leadership early, this idea of hiring in advance. There are some businesses where there's a very good proposition behind, like, let's get out ahead of it. We know we've got this market commitment. We know that, we've got this key product we need to build or whatever it is. And there are some where frankly, it just feels like a mismatch in terms of business size, complexity, and the skill set of the person that you're anticipating that you need in that seat. And so I more than anything try to get a clear understanding of what are you trying to accomplish? What is the business trying to accomplish? Is there maybe an alternative solution that doesn't necessarily mean kind of big budget hiring in some instances? Maybe I'm not a good business person and I talk people out of spending money working with me, but I think ultimately, you want people to be successful in the roles and find the meaningful enough and meaty enough. And so I try to make sure that that actually is the right decision for all parties. I also encourage people to look around team dynamics. I really find the phrase talent collecting, which I hear often and see it often, and you see a lot of the logos on, a lot of
Mhm.
decks. I find that to be a very ineffective way of building teams. I do think there are pattern recognition, indicators that are important when you're thinking about experience at having someone been in this type of environment translates well to this type of environment. Some of its business model, some of its company size and stage, maybe it's a blend. But I think assuming because someone was successful in one context does not necessarily mean they will be successful in another context. And the idea of just putting people together without any sort of forethought into how they would complement each other does a team a major disservice. Um, and then the other thing that I would say is to varying degrees of success, I have worked with third party groups who do team alignment, culture alignment, and this is everywhere that I've worked. And you do have to work at it. You can't just say, I've put great executives together at this table. They should be able to solve this problem. So, team dynamics, I was an athlete, I played soccer. You can't just assemble, an all-star team and expect them to play well together. You have to practice. You've got to go through stressful situations. You've got to scenario test. So I think knowing that you're committed to building a team really matters, and not expecting, a subset of individuals to solve a problem is an important thing that I at least try to advise when people want my opinion on the topic.
So on that topic, in a short amount of time, especially healthcare startups have changed and how they're being built and how they're being funded. What are the key changes that you see from even 5, 6 years ago that now you're seeing as you're helping these execs and these VCs either find their next role or trying to hire into those roles?
It's a good question. It's always changing, and my point of view is changing on this constantly. I was actually just on a Zoom 20 minutes ago with two women who are looking to start a business, who are looking for access to capital, and it's my first time meeting them. I was excited. I'm like, I love an entrepreneur. I love an idea. I love you have a business plan. I love women entrepreneurs. The path to entrepreneurs securing capital is tough. I think the way that capital allocation has happened over the last few years has obviously evolved. When I started my career, it was like Series A's of like 2 to 5 million. Sales cycles were really long with health plans and health systems. Companies might run out of money on just the sales cycle alone. Proof point didn't really play out. New round of funding likely didn't come. Business upended, right? Like that was what we saw. And then you started seeing private equity firms and venture firms getting a little bit more involved in the development of the concepts, the commercial launch. And then you had Series A's not too dissimilar from what we had at Bright, which is $80 million. That's a very different ballpark. Now they probably moved back to like 25 to 40. And I'm not quoting actual numbers. Anecdotally, I think it's harder for an entrepreneur to get access to that type of capital. And so you are seeing people who've been there, done that, be seen as the right fit in a lot of these businesses. It just changes the profile of like who's motivated to do this work. How motivated are they to do this again? And so I am seeing a little bit of, you want the tried and true, which obviously VCs have always wanted to invest in people who've had success, but I don't know how motivated, some of those folks are kind of long term. I am seeing with the creation of these venture studios or these, built for purpose models, the investor groups tend to think, well, we have the commercial relationships, we have this, we just need a really operational CEO. And I've seen some of those people really struggle to either really own the concepts because it wasn't maybe theirs. They didn't kick it around. They didn't start it. They inherited it and they sort of expected that someone else did the diligence and it was going to work. And then didn't have the commercial relationships to pivot it, extend it, and really make the business ultimately successful. And then obviously, today, this is a week we're filming, not everyone knows this, a week after the advanced rate notice came out. And so you're just continuously seeing a lot of the pressure coming from payers, coming out of CMS. Reimbursements are tough. So, I think the sale is harder, the endurance is harder, and you're seeing a lot of businesses, unfortunately, having to get kicked around sort of downstream. And I guess my point on that is you do need a more strategic person who can kind of navigate some of the regulatory challenges, but also optionality game doesn't work. So it's a very unfocused time.
It's interesting that you're talking about that. I was speaking with a founder earlier who went out for Series A last year and got exactly what they wanted within 6 weeks, and then is planning on a Series B and is planning on it being 6 weeks again. And I was like, have you run that up the flagpole from a timing perspective? Like it's interesting. It's great that you have that kind of interest, if that's really what it is, but I haven't necessarily seen that kind of turnaround with
No, I would agree. Timing is everything. There are several CEOs that I've spoken to who feel like they have timed it absolutely perfectly, and they are so lucky they don't have to raise again, and they're able to do more with less and manage, cash very, very, very in a very disciplined way. And then there are others who have just been on the tail end of AI coming in. It wasn't necessarily part of the initial, business plan for them to have this like market leading AI solution. And so clinical results are there, but they're lagging in terms of what investors are looking at. And so they're constantly in this fundraise cycle. So I guess in sort of response to your question, I think like endurance matters way more now. And it's been tough from a talent standpoint in the market. As I've talked to people, there are people who are way jumpier right now than they ever have been. And I would say that is largely due to the fact that if you look at 10 years ago, not to use Bright again, but you had like Oscar, you had Bright, you had Clover, you had Evolent, you had Privia, you had businesses that were exploding, Landmark, right? Exploding, Oak Street. And people loved the variety, the change, the fact that you could have 8 different jobs in 3 years. And now, businesses are not just exploding. Payers are putting way more scrutiny. There's like AI review boards now. There's so much. And so these are becoming one product, one market companies that are requiring a slog, prove it out. And people are like, I don't want to do that. That's boring. And so they're jumping to what they think is the next hot thing, when reality is on some of these, you got to really dig in. And so I think that's really impacted the talent market. You need a thick stomach these days.
Yeah. I also think that there's not a lot to jump to. So you kind of have to either stick it out or you might end up being on the losing end of that gamble because there's not a lot of work out there to be had.
I would also say that I have found that it is exactly what you're saying. It's either you're very jumpy if you have a lot of opportunities that seem to be coming your way, and there are some roles that are a little bit more in demand. And then you have people who are like, meh, I'm paid fine. I have work-life balance, like they are very much hiding out and enjoying having a steady paycheck, which net is like pretty unmotivating. I think if you took a collective pulse of some operators out there.
Okay, so circling back to what you're doing now, you spend your time advising exec teams as they build their companies. What do you wish that founders came to you, and what conversations you're having earlier than later?
I think would like to talk a little bit more about what they're solving for. What I was sort of referencing early, which is, where do you want to be in 3 years? Where are you today? What do you think you need to do to actually achieve those metrics? How much of it is fixed cost? How much of it is variable? What are the talent needs that you have to get there, and what are perceived and what are real, and what is board pressure and what is actual based on lived experience. So I think those are ones that I would probably like to talk to them about earlier. I actually, frankly, have been spending time trying to connect a lot of entrepreneurs that I work with to each other, because I think a lot of them have very similar problems or similar concerns or looking at the market similarly, but don't have that gut check, right? As a CEO, you've got your employees who are working for you, who are looking up to you to tell them what's up. And then you've got the board who, check in on you once a quarter. And so as it relates to what is actually going on and having that support system, I think it's spending time. I would advise them to spend time with more entrepreneurs to have a sustainable peer group.
That is a great place to end it. Maura McGinn, thank you so much for joining me and sharing your wisdom.
Thanks for having me. I loved it. I love to share my wisdom.
Thanks for listening to No Operating Manual. If you enjoyed this episode and you'd like to support the podcast, please leave a rating and a review, and don't forget to subscribe on YouTube. No Operating Manual is hosted and produced by Erin O'Brien of Chemistry, a healthcare marketing and communication advisory. Visit our website at choosechemistry.com.